And good morning. This is Simon with Trade and Perform Coaching. It is Wednesday, the 26th at 8:03 a.m. Central Time. If you'd like to get a hold of me or ask for a pass to the room, 5-day pass, just email me at tradeandperform@gmail.com. I'll be happy to accommodate that. Before anyone asks, there is a charge for the room, depending on what options you choose, but it's somewhere between $95 and $250 a month, depending on whether you want the software on your desktop or not. So that'll solve the people coming in and then being shocked that there's a charge for it. So as far as overnight trading, I cheated a little bit. I traded in Asia. I normally don't trade Asia, but with the Google news, I knew that we would be moving, and I really thought they were overhyped to the short side with Google's news. And my reasoning for this is simple, right? So first of all, we all know the Fed's increasing interest rates. That has an effect of slowing the economy down. Number two, so Google, Microsoft, and someone else, I forget who, missed earnings, right? And the market was down pretty good from the highs in particular already, but then we gapped down again in Asia. So my reasoning kind of goes like this with my past experience. So everyone expects bad earnings. Tech stocks have already been crushed. They come out with bad earnings. They sell it when the bad news comes out. But the market's already been kind of crushed. So just like on the upside, when a stock runs up into earnings and it beats expectations and then it goes down, you can have the opposite effect on the with the market on the short side, where yes, we missed earnings. Yes, it wasn't pretty, but at the end of the day, was it terrible or end of the world? So then you got to kind of look at it and go, well, what's the market doing? So the first thing that I noticed was an ES, right? So if you look at this ES chart, right, the first thing that you'll notice is we never traded below, ES never traded below Friday's low. So that's kind of interesting. Apple's tonight, but Google, I think it's Apple and Amazon today, but Google and Microsoft are pretty heavily weighted in the actual S&P, if I'm correct. And so ES just kind of gapped down into the 50-60 back, right? If you look at this, here's the swing low of the day, right? There's the push. And we just came right into the 50-60. Here, I'll make this bigger. But we just came down into the 50-60 retrace, and we never penetrated below prior day's low, despite the fact that we were poorly auctioned off here to the left. I mean, they had every reason in the world to be able to drive that thing down, and they couldn't, right? So we all know the rule. You gap down within range, that usually gets an initial buy response, right? It's pretty straightforward when that happens, and that's exactly what we experienced, right? So then if you go through and look at NQ, which is your next candidate, right? It was a little bit stronger response there. But if you look how that worked, so we gapped down below prior day's low, right? So they took back the entire rally, right? They tried to push back into it. They couldn't. So the reason I marked this in blue is I was unsure about this anomaly. So this is a judgment call when I do the anomalies. I was unsure about the anomaly, and I thought it could get pressed through because I think the stronger support was down here by this 11,431 to 11,374 based on where buyers have been repeatedly and sellers have been repeatedly. And you'll see we really didn't get down in there to test it, specifically that there's an anomaly inside of there. And so you would have thought, well, that would have gotten tested pretty easily, but it didn't, right? And then you had ES not matching NQ, meaning NQ below prior day's low and ES holding. And then you got to contribute the factor that, well, NQ is very thin, right? And then you take it after hours, it's super thin. But even with that, it wasn't like a straight down flush. Like you can even see the initial buy response was reasonably strong. It gave like a 30-point counter rotation off the gap down, and then they smoked those guys to the downside, but they couldn't make it into key support levels, not yet. And so then you're looking over here and you're going, well, could this come back and backside test prior day's low given that ES isn't that weak, right? So I'm just trying to step through my thinking process, right? Plus the focus on I want to be primarily on the long side of the trade. I am working on improving what short trades are valid or available. but that's how I kind of want I want to be on the long side of the trade, right? Specifically because I just don't get smoked with the constant grind up on the long side, and I do on the short side on ES, and the stress levels associated with it in particular. I'm kind of at the point where I don't know that if I need that. It's not like being short oil. Like I would never have that policy in oil or cocoa or palladium or anything else that trades, right? Shorts equal to long to me. It's a product that goes up and down, but the very special mechanics of ESN and Q make longs pretty desirable in that market with the way the market just operates, right? So now if you come over here with that thought process in mind, looking for longs, right? So we're pushing down, we're pushing down, we're pushing down, and you'll see we get 1, 2, 3 waves lower. They're still driving lower, and what you'll see here is they finally make this last little push, right? So there is no apex trap to take over here, not on the 24 tick. There is no apex trap to take. It's just not there, right? But you finally get right over here, and I think, oh, we're going to have this apex trap right here, and it misses like by 3 ticks. It just doesn't close back in, so it becomes a judgment call, right? But now we have 2 potential trades when you get here, and you should really break it down like that. So one trade is the wave to the low to the wave to the high, but unfortunately you don't get the completion of the wave up until this triangle down over here, right? So we lose the POC over POC trade. But if you look here, right, what do we have? Left shoulder, head, right? And so it gets up here, not all is lost, because now I go, well, maybe I can stop this guy out over here for a left side, right side, head and shoulder. And that's what we do right here. And even more interesting, we get a POC under POC, that little white square, which tells me someone pushed really hard and they meet it right away with the star. That's bullish, okay? And it's a apex trap. So the reason I'm coming full circle around this, right? Because if you look at my P&L overnight, I was up pretty huge. Here's my, if I can pull it up, go to the profit. So that's my overnight. I'm up in the 2 apex accounts I'm trading for the room at 1487 and 1482, right? And you'll see I'm just a little bit off the highs. The equity's at 1.4. Excuse me. Here we go. Let's see here. Okay, so current account balance 154. Remember, these were started Monday morning at 150, right? 154,288 and 154,093. Following process, right? Auto liquidate threshold. You'll see that trailing stops coming up 149,398. So you can see I'm off about $100 in this account, and this one's 149,203. I'm at 154,093, so off about $110 on that account, right? So 2 things you'll notice. First of all, and I'm going to address this specifically because it benefits both you as whether you're trading your own account or you're trading, you're trying to qualify for whomever you're trying to qualify. You'll notice that I'm constantly trying to exit these trades near the high. I'm in this stage of the qualifying, right? So it'll follow 2 stages. In this account, my trailing stop is $5,000. So when I get this, when and if I get this account to 155, 100, my intraday trailing stop will stop, right? And I will no longer have a penalty for holding a position, letting it come back on me. I still don't want to change. I want to do exactly what I've been doing all the way up until I get this to each account to 160, and then I'll add a contract on entry. I'll go from 2 to 3, right? And then the other thing I'll do is I'll try to push those trades on my trailers a little bit further because there's no penalty for letting it come back. Whereas right now, there's a clear penalty for letting it come back. With the way those trailing stops move in these accounts, you have to chip it in inch by inch. And you'll notice, I know I'm having, the goal is $500 to $1,000 a day. So clearly I'm exceeding that goal, but not intentionally. It's just coming because I'm following process all the way through and the money's chipping in, right? I'd be just fine with $500 a day in each account. It's $1,000 a day. It's a lot of money. $5,000 a week, $20K a month. That's like $250,000 a year, right? Even half of that's $125,000. $500 a day excuse me, 500, 1,000, 520. Yeah, it's like $250,000 a year, right? So not every day will be perfect. Most days will be profitable. We know that because we're following the process, right? So then when you look at this, what did I do different? I simply decided that on this particular trade, the reason the PA is up so much is I said I'm going to hold this until I get my first down bar, right? So initially I was off a little bit here. So obviously I gave back some P&L because this went up here, came back down here. And then I did a quick scalp somewhere this morning, I think, to kind of tighten it up and get it closer to what the absolute high was. But that move right there. So a couple things went into this, right? First of all, I'm not scared to go long. Secondly, I didn't look at the chart and by some special premeditation determine, oh, it's going up, right? What I said was, let's follow process. That's all I said. And if you followed process overnight, right? If you followed process overnight to the long side, this is what you ended up with. So first of all, on the long side only, you never got a trap to the upside. It just started grinding. It really went trend up. It never gave a trap to the upside. It did give traps to the short side. Obviously, I wasn't up at 3:30 in the morning to take that, but I wouldn't have taken it anyways. It doesn't matter. I don't want to get stopped. And then this trade right over here, that is your first long at 5:05 in the morning. And if you took it, you had to take it twice because if you had a 1 point stop, I think you just got nicked right here. So this is how I would have done the stop, right? I would have said, okay, trap. And then I would have looked at the low here. And I usually round the number, right? So it doesn't matter how you looked at it, it got stopped. Like my stop would have been right over, probably right there. If I would have said 509, 508, I would have said 507, right? Would have been what the stop was. And clearly it would have got tagged out as it was. So I expect some shenanigans in the morning anyways. And so that, that trade, I think that's an acceptable second entry on that trade. Anyways, that's how I kind of squeaked just with a few contracts the P&L back up. And then you'll see right over here something really interesting happened. And I was actually just chatting with Daniel. See how this is another trap right here? It's actually a trap on a higher low. It's a good trap, right? And so if you follow the process that Daniel follows, right, he initiates here, right? And I was talking to him while this was going on. I just got the girls dressed, came back out. And so I was talking to him. I did not take this trade, but we were talking through it in real time, right? And I said, okay, well, he took this trade, he added, and we were discussing what makes people want to come off process, right? So that trade looks like sure as day it's going to stop, right? Like the stop would be right here. Your entry would have been here. Plus you have, this is your entry. This is your stop plus a point. So let's just call it 01 would be the stop. So it looks like it's certainly going to hit that stop right here, right? But because he added, so he goes from 17, he adds right back over here at 10. So he's like at 13 or 12, right? For the trade as a whole. And so then what's his maximum favorable excursion, right? So that's 1528. Well, if you brought your average back to 12, right? That's 12, 24, 15 points, $200 and $300 a contract. Now, why was this important? Because of the investment into the investment into the trading itself, right? You're invested in the process. The process says don't move the stop. And I told Daniel, I go, I'd want to do everything in my power to get out of that trade right there. Like I'd be like, oh, I'm going to get stopped, and I can save 5 points by exiting it right now, right? That's why you'll see me in the room going, they're going to have to stop me or pay me, but I'm not moving the stop, right? Why is that? More times than not, this ends up going profitable for me. How many times do we get saved in the room as a group by just inches, right? We're like, oh, it's going to stop. There's a reason why the stop's there, and you have to be invested in the stop and see the stop as your ally. Now let's take it the other way. Let's pretend it did stop, and you go, oh, I got stopped. Well, what stop? Let's pretend this bounce never happened, and so your stop's going to be right there at 01. What stop in this process, right? What stop in this process was the preferable stop? Because if you didn't have your stop there, in order to survive this trade and bring it back to profitability, you'd have had to move your stop from 01 all the way down to like 75. Let's just do the rounding numbers, right? So that's 26 points or 25 points for easy math. That's $500 additional per contract in addition to the 12 or the 15 or 18 points that was there. So it's 25, 35, 40 points. You'd have to risk $800 to improve this trade, i.e., terrible, right? That's just not what you want. And we were discussing, what lets us come back and repeat the trades over and over, whether we get stopped or not. It's really important, right? The variability in the process is never the stop, right? The variability is always the exit, right? Whether you're going to take 10, 15, trail it up, recognize the setup, so on and so forth, right? That's where the beauty of the process is. Whereas most people, most retail traders, the variabilities on both sides of the actually it's on all three sides of the equation. There's usually no set entry, right? Secondly, there's no predetermined stop, and there's no predetermined exit. So people are constant. What that does is creates an area of constant anxiousness for you, right? Cool. So the whole point behind it. So the whole point behind that, right? The entire point behind that is we've removed two parts of uncertainty within the process. You know the exact setup you're looking for or setups, right? Number two, I'm trying to even tighten that down even further by encouraging people to trade to the long side, even in down markets, right? And then so now the variability becomes a how do I exit this trade relative to um, whether I'm trading a personal account or one of these qualifying accounts where you get funded. Number one. Number two, right? What are my goals, right? You can do 15 and 10. I can prove to you, even with an inverted RR, 15 and 10, and you will come out ahead in this game if you stay on process. You won't be comfortable, but you can do it, right? And then what that lets you do, once you get past the point of, I'm not going to get destroyed, and on most days I'm going to do pretty good, now we can start focusing on what pays well. Like, for example, let me show you. This ES Apex trade trap right here, right? I'm going to line it up. Here's the trap, right? So why is this special? I'm going to show you why this is special. This is right here at 7:20 this morning. Why is this trade special? What's the opportunity there? There's two trades there, if you'll look, right? So when you open this up, the first thing is this makes perfect sense. Let me show you why it makes perfect sense. This and this are, as my daughters would say, when you know you have six girls, when you have twins and they go, we're going to be matchy today, right? Which means they're just going to dress alike. So, so you see there, that's right into the single prints and at 38, 32.50, right? So you know single prints get responses, right? And then there's your apex, there's your trap back in. Even if you didn't take it there, here's your. So that's option one. Option two, left shoulder, head, come down to test the left shoulder on the right shoulder, purple bar, POC over POC, and you have a wave to the low and wave off the low with POC over POC. Now, that's in pre-market, so take it with a grain of salt. But whether you took the trade here or you took the trade here, it clearly each one won at least 5 points, right? Which is more than enough on ES to get paid, right? We're following process in that. In addition, if you go back to the low of the evening, right? You'll notice ES did not trap, NQ did not set up. ES never stopped out this power bar over here. It actually didn't form a power bar, so it was all the way up here. There should have been a power bar there. It's a technical issue, but either way, it didn't stop it out no matter how you looked at it. But you still got way to the low, wave off the low. So if you come and draw that, wave to the low, wave off the low. Okay, so we've traded above both of them, pull back down. The green triangle tells you, the green square, excuse me, tells you have POC over POC, and then you got the star in addition off of there. So there's your two longs if you wanted them in ES, and clearly beautiful rotation back up. That's a bullish configuration, right? Then lastly, what else is there besides the single prints and everything else? Well, there's our high, here's our 50-60 back, and then there's your trap at the 50-60 back for another rotation, right? So does that mean we're going to go straight up and that's the low and that's all I need? Well, if that's your thought, like I would think we could go back to the prior day's POC based on the way it's trading pre-market. I don't know, but I might be inclined at that point to go, hey, I can take a shot to the upside. What's the worst I can do? Well, if I scale this off, right? So if I look at that trade, and I just do some quick math, right? So let's say I traded 2 contracts on this. This is my entry, 39. The best I could have done on that, right? There's that yellow area to target for your scales, would have been 44. Still 5 points. Even if it's 4 points, it's fine, right? 4 points. 4 points takes care of most of your stop. Now, if you think it's going to roll lower, you can just take your money and run, right? There's no problem with that. It actually had an apex trap to the short side if you want to trade it for down into to going through and re-auctioning those single prints, right? But if you're going to trade for the long side and that opening print rush, you can just leave your stop right there. Now you've reduced your stop. It's 39. The bottom of this, I think, is right here. So it's 39 to 34.50. So roughly 5 points a stop, right? You've taken 4 points. It means you have 1 point left on half size, right? And you can take the shot to go to the upside. You go, well, Simon, that's crazy, right? Why would I leave that on? And it looks awful. You could have said the same thing yesterday morning. Here, let me show you. Here's on NQ. Very similar trade, right? And I didn't take it yesterday morning, right? Why? It was outside of my time zone that I usually trade in. I don't trade in that 7 a.m. period, right? It hit 7:45. But if you look, here's your. It took place on NQ instead of ES. But if you look at it, here's your apex trap, right? Here's your wave to the low, wave off the low, right? If you draw that out, it was a little bit funny because of the POC was all the way up there on the second wave, I think, all the way at the high. Not quite at the high, but you'll see we traded above both of them, right? Now we come back in. No setup over here. This, I think, should have been a star. I'm working on fixing that, but it wasn't. But here's your POC over POC. That trade, your entry, right? You could have run the exact same process. Here's your entry. Here's your stop. Let's say it's 15 to 18 points, right? So it's 66 to 48. So 18 points, right? Here's your 10 points is 76. So there's your first scale roughly. And if you got 50, if you want to take another at 15, right, it's roughly right here. And then you could say, well, you know what? I've paid for most of this trade. I can just leave the trailer on. If you did that, right, your high, you took that long at 11,466. And so if you held it towards the end of the day, 466 to 11,720. Or so what was it? What was our net? So 466 to, why does this look weird? 566, 666, got 200 points, right? $4,000 contract. Now, what was our target? 11,700. That was discussed yesterday morning. So you can start to implement the pieces behind it. But what was the key? If I had taken that, even if I said, you know what, guys, I'm going to go ahead and trade and take a shot at it at 11:45, what was my risk on this? 18 points. 18 points. 18 points. I can trade my entire process because I know exactly what my stop is and exactly what my risk is every single time. And guess what the beauty of the system is? You never have to catch that trade. I didn't catch any of that yesterday, traded long side only, and still had a great day. I think I made $1,400 or $1,600 yesterday, and I'm up $1,400 to start today, or $1,500 to start the day today, and we'll see what happens. We didn't trade the first half hour, right? We avoided all the landmines. We took some stops in addition to that. One stop, I think, maybe two, but we followed process all the way through, and we left some trades on the table that I just didn't take. Like I didn't take this over here. I was tired, right? That's another perfect setup right there. And that was worth another 100 points, roughly. Maybe 75. I may be exaggerating the 100 points, right? But right there. So what's the whole point behind this? Over and over again, same process, just a few setups, long bias primarily. If you want to trade short, I'm fine with it. I am breaking myself with my short habit because it causes me too much stress. And then the first thing I thought of when I wrote it down this morning, well, I told everyone I'm going long only, and now we have the Google news. Is it going straight down? Right? Am I going to take stop after stop after stop? So I went back and looked in January what it looked like. And so I'll know the areas I want to trade in general. I know the trades that I'm looking for, and I'll just take my trades as they come. I already have my risk built in. I'm going to focus on the long side today. The only short I will take is the POC under POC. Once you get the wave to the high, wave off the high, and that'll be on half size, right? The only difference is I'll push that or take the stop, one of the two, right? So just realize right now I am trying to wean myself off of taking the aggressive shorts, right? Because they just cause too much stress when we do this right here. And they force me to always be Johnny on the spot with my trailers to figure out if they're going to stop or not. And I would just rather be long here and go, oh, I'm just going to park it and let it go. It's just easier. If I have the inclination that it's going to run a long way to the long side, that's easier to accomplish with the long. See how this, once you got the long here, I just really kept going. It never happens over here. Let's say you took the apex trap over here and you're like, oh, I'm going to stay short. Well, it comes almost all the way back to stop you, right? Your entry's right here. Like you think, oh, I'm in great shape, right? You actually went down on that trade. And if you're in an apex account, right, you've probably stopped it out at that point. It's such a big counter rotation, right? So again, I like the long side because of this price action. You don't get it on the short side. You do get it on the long side. So things we're looking for today. Does ES ever get out of prior day's low? Number one, right? Can it get through their single prints? Can NQ break overnight low, which we're about to find out as it comes down to test right away? All the sellers are right there, right out of the gate. My guess is they're going to get stuffed. The guys that are doing the early selling are going to get stuffed, at least initially. And everyone I know thought the news was very bearish. We'll just have to see whether it is or isn't, right? But you can see the selling right out of the gate. There they took out the low, I think to the tick. There's the takeout at the low. We'll see if they respond. We're not trading the first half hour, and we know exactly what we're looking for, right? And if you see it going vertical like this, you don't have to take your trade. You can wait till it gets a little sideways on it and then stops it out if you want. But just relaxation. In terms of econ this morning, we have, 9 a.m. We have BOC rate statement coming up. So that's Bank of, is that England? Is that England, BOC? Or Canada? Canada. Those guys can swing the market. Let's see. New home sales at 9 o'clock. We know that. So we know that number should be low, right? We know that. Matt, that's $1. That's two. That's well, there's inflation, so that's $1.80 in the U.S. in the tip jar, or $10 Canadian. You take the choice. In the curse jar. So let's see. New home sales, crude oil at 9:30. 5-year note auction at 12. And then Meta. And doesn't Amazon? I thought Amazon was tonight too. I guess not. Yeah, Amazon and Meta right at the close, right? That would be a juicy short squeeze there at the end of the day if we can break the low. Yeah, I thought so too, but it doesn't show it on these guys. All they have is Meta, so I'm sure Amazon's there somewhere. So again, you'll see these guys just got bone stuff. You know, I mean, that was just so predictable. And if you look at it with ES, okay, along with the oil numbers, we're apparently like the lowest. We have less than 30 days of diesel supply in the U.S. or something like that. We might want to think about building a new refinery. Just saying, maybe 20 days. There you go. Ha! I'll take a ride, dude. So down 24, and then if you look at ES, it's just not. Look at it. It's just not bad. Just didn't even make a dive for the lows, I don't think. Not even close. So how are you going to get NQ? So the first thing we know is NQ and ES don't match up. How are you going to get the market to tank without ES, right? How are you going to get it to do it? I wonder if the banks are holding up the S&P. Could possibly be the answer there. I don't know. Yeah, but they were up $1 trillion monopolies are down 8 to 9%. Yeah. So, anyways, that's my 2 cents about today. Does anyone have any questions? I expect to have a great day. I know exactly the setup I am looking for, right? I'm clear on what my objective is. I'm not trading the first half hour. I had a lucky or great overnight, depending on how you want to do it. I was on process, right? And so I'm just looking to continue to get paid. No one has any pressure to trade today. If you're uncomfortable with it, right? Find out if you're comfortable or uncomfortable prior to entering, right? That doesn't look overly bearish to me. Maybe I'm crazy. And that's an apex trap right there. Longs seem like they're working okay. And that looks like it's a wave to the low, wave off the low setup. Oh, it was a star, but it didn't touch either one. You needed POC over POC. Yeah, there it is. So it's a 1 bar stop if you take that, right? So there's your 10 points. and you have a possible runner if they squeezy them back to either gap fill or prior day's low. But look at that. That's right on target. And now that's just like yesterday at 7:45. Maybe it goes, maybe it doesn't. You don't know, right? You just don't know. So you leave a trailer and see if it hits. I don't, not at this time. But if that was any other time of the day, I'd press that. I'd have all my risk off already. Assuming I don't have to be concerned about a trailing drawdown. Cool. Thank you, Bill. So we'll see. Not above the wave to the low yet, above those 3 power bars, but that's not mega bearish to me. Like, I don't see anything that's scary about that. Nothing would. I would be not surprised if we went back to flat on the day on NQ. I mean, ES is down 20 points. It's just not the end of the world. And I may be totally wrong. If I see it go trend down, I'll change my mind after the housing numbers, but that just doesn't look scary to me. And who's in the hot seat again? The shorts, right? They need this thing to go down. You just broke the low overnight. If you didn't cover that, what are you going to do now? Pray that it goes trend down with ES pushing up as we speak. That's the other advantage of sitting out the first half hour, is that you don't get let's see. I am missing QES. There we go. Oh. Where's my ES? Oh, there we go. I mean, look at ES. It's pushing towards trying to make it back to the prior day's POC. Thanks. Need that back. So at any rate, that's 2 cents. And if it stops, guess what? Who cares? It's not like there's going to be a million other. This is all hypothetical, right? I'm not in the trade. I could care less what it does right now, right? Everything I care about is after 9 a.m., right? And since we know we have all that housing news, you might want to wait till 9:05 a.m. Let it kind of get the breather and the response out of it, since everyone is so geeked on the building. But I'm pretty sure if we have a negative number, that POC over POC is valid for long. Right there. I'm pretty sure if we have a negative number, we actually go up, right? Because, again, people are looking for evidence of the economy slowing so they can stop raising interest rates. Boom. And if you're still long from over here, maybe you got stopped and you had to tag it back in and it became an apex trade, right? But again, you've got your risk off. If you reinitiated, you've got your risk off. I don't think it's a bad deal. And good morning to everyone that came in a little bit later. If I missed you. So now we can see, right? That would be a head and shoulders trap left and right. Let's see what's working better. The short should have an easy, like the other thing you would expect is that the shorts have an easy time rolling down, right? But they're not, right? This isn't selling upon selling. This is open. We got all the panic sellers right out of the gate, right? Right there at 8:30. And then now what do they got? Like, shouldn't it be, if we're short, shouldn't this thing be rolling down easily, right? Why is there a friction here? Why is there a trap going on? Why isn't everyone just puking out of the trade, right? I don't know. I think that things are look better than people say they are. Maybe I'm wrong and it changes after 9 o'clock. We do have to be aware of open drive higher or open drive lower after 9 a.m., right? And if we see that, what constitutes that? Bar after bar just driving down, 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 and then we know, right? Wait for your first 5-minute bar to close above, or wait till it gets to the orthodox close above the top of the channel and start working the traps to the long side. All kinds of options that you have there, right? To wait for the long side of the trade. But I would encourage y'all to go back into January and May, look at those trend days down and see how you would have done. They're not all like, oh, everything was easy and there was no stops. There were stops. Some days you ended up, down, up, down, up, down, up, down, up, down. The point of it is if you can make it through the difficult days with little to no damage or positive, right? And then you get the moderate days to the up days. Those are your paydays, right? And then you don't have to constantly worry about, let me figure out the short, let me figure out the long. There are some shorts that work that I'm in favor of, right? But what I'm not in favor of is constantly flipping back and forth, getting frustrated on the shorts, getting the stops that prevent you from taking the longs. I am against that, right? Because it just ends up leaving you frustrated and spinning your wheels over time versus attacking it one way over time. That's my 2 cents about that. But to me, the market should be rolling down easier than it is. And if you remember a couple of weeks ago, right, these open drive lower, like you got to the prior day's low, a little bit of bounce, and then we're not having that here. And ES and NQ matched, right? ES and NQ don't match right now. And I'm going to tap that out for a recording so it doesn't jam up my computer.